What Prypco is offering today is not just tokenizing for the sake of owning a piece of the property. You're also it's more of an investment, right? So it's really about capitalizing on my investment and generating the maximum return possible. That's from my upfront kind of capital, is to make sure that we are sourcing the best properties out there that are not just tokenizable for the sake of tokenization, that are also good investment opportunities.
Welcome, Jad Kachmar, to Digital Building.
Thank you. Thanks for having me. Super excited to be here.
Excited to have you. Okay, so tell us about Prypco.
Yeah, so Prypco is a UAE-based real estate tokenization platform that is basically focused on, well, RWA tokenization, starting with real estate since last year, 2025. You've probably heard about us because of our kind of initiative with the government of the Dubai of the UAE around direct kind of ownership tokenization of real estate in Dubai, kind of one of the pioneering kind of first in the region, if not, I would say, the world, to tokenize title deeds directly through an integration with government kind of registries. So yeah, super excited to be here representing Prypco. I lead operations on the fractional side, so both of our product offerings, which is the SPV kind of model that is not tokenization, Prypco Blocks, which is kind of the older brother of the tokenization model called Prypco Mint. And yeah, we've been doing this for almost 3 years now. Tokenization being more nascent for the last year, tokenized over kind of fractionalized over 50 properties, all in Dubai. And yeah, it's been going really well. Super excited to share our experience and our insights on this podcast.
Yeah, amazing. Couple things. Let's back up. So our audience is very much on the commercial real estate side and also maybe even on the AEC side or architecture, engineering, construction. I've always built in those two spaces as an entrepreneur. And so that's kind of who my network is. So just to help them understand, you said a couple of acronyms that I want to make sure they understand. RWA, and tell us about that.
Sure. So RWA stands for real world asset. And I think it stems from, the Web3 world being digitally native. So when you hear about Bitcoin or Ethereum, they're all kind of virtual assets. And when, blockchain innovation came into the picture 10 plus years ago, that was kind of these were the first use cases that were kind of the applications of the blockchain technology. So cryptocurrencies and then digital assets altogether. And then the evolution of that was the emergence of stable coins, which are basically tokenized money, right? And that's where, more use cases came along, and you hear a lot more about these more frequently these days because of cross-border payments, settlement efficiencies, and so on, and kind of programmability of money altogether. And then the next evolution of that was, okay, we've tokenized kind of put on-chain virtual assets, cryptocurrencies, and tokenized money or stable. Now the next big evolution has been, or this new wave has been, of real-world assets, meaning assets that are not virtual in nature, that are technically kind of physical or more tied to the traditional space. So stablecoins actually are classified as real-world assets, RWAs. You can see those sometimes in global kind of reports or market reports. And then real estate is another one, right? Real estate is another asset kind of market where the asset is actually physical on the ground. It's not virtual, hence real-world asset. And by tokenized real estate, we're tokenizing kind of real-world assets or RWAs in that sense. Another kind of type of RWAs are like bonds, securities in general, art, commodities, all kind of real-world asset that we're familiar with, pre-blockchain and pre-tokenization. And we're applying this technology and this innovation in that world for all these gains that we're witnessing these days.
Yeah, amazing. And just for the U.S. audience, we did pass legislation last year under the Genius Act that makes these stable coins perfectly legal, right? So that was very exciting for the space to see that happen. So back to the real estate piece. So tell us, when someone buys a token on Prypco Mint, what's actually happening at the Dubai Land Department in that moment?
Yeah, sure. I mean, before I answer that question directly, let me just preface by giving context about what used to happen or what we see
Thank you.
happening before blockchain or before tokenization. So, um,
Yeah.
fractionalization or kind of investment in a fractional piece of a property is not a novel concept, right? It's been around for a while. It's been tried and tested before. The common kind of approach to it has been, you know, you set up a company, usually a special purpose vehicle that is sole purpose is to hold ownership of the asset or of the real
Yeah.
estate in this case, and that company or SPV would be the sole proprietor of the asset. So you as an investor, when you want to invest in the asset, you don't actually own the asset legally on the ground, meaning that the SPV or that this company that we set up is the one that has its name on the title deed, government kind of records, right?
Yeah.
And
Yeah.
how investors used to invest in that approach was when you invest in a fraction of this real estate, you're actually registering your name as a shareholder in that company or in that SPV. So you're owning a share of the company that owns the asset and not the asset directly, right?
Yeah.
And that's a model that has been proven to be quite, successful over the years, pre-blockchain, pre-tokenization. However, in certain jurisdictions and in certain countries, it could be quite inefficient to do so, either from a cost perspective, because if you're establishing a company, you have to, register the company, register its kind of legislative documents, articles of association,
Yeah.
maintain its cap table, and incur cost on that. And not only upfront cost, but you have to do that every year, especially in Dubai, for example, or in the UAE. That's quite a hefty cost, right,
Yeah.
to incur
Absolutely.
on top of the property value itself. That's one aspect. Other aspects as well is that when you're transferring ownership of the property, you have to go to this notary service that is kind of governmental in a sense or semi-governmental, and you have to have the seller present in person or their power of attorney, let's say, representing them, and the buyer, in this case, representatives of the company, that SPV, in person to exchange ownership in exchange for monetary value, right? So that's also another constraint. And that mechanism altogether has been proven to be good in a sense. It is a good investment vehicle. However, there's still some inefficiencies in that, either from a time perspective as well as from an effort and cost perspective. Introducing blockchain to this equation, just like it has benefited many other kind of use cases and value chains where there's a lot of stakeholders involved, such as real estate. There's your notary, there's your seller, there's your buyer, there's your agent, there's your valuation company, there's the regulation, the regulator, there's the registry. There's a lot of parties involved, and
Yes.
a perfect use case for blockchain technology, where you have multi-party kind of necessity to read from a single source of truth, right? So with blockchain and tokenization applied to real estate, what has happened is that it eliminated the need to have um, a company owning the asset. So there's no need for an SPV anymore. You can directly, by holding a token or a fraction of that title deed, and I'll tell you about it in a bit, how the mechanism of how that works. You're basically, by holding the token, you're also holding true ownership and legal ownership of the asset. So you no longer need a company to represent that ownership anymore. You
Yeah.
can be that kind of token holder with its ownership, intrinsic kind of ownership by holding the token or by holding custody of the token. So that's a big thing, right, for the investment kind of side of real estate, because you're eliminating the need to have the SPV, you're eliminating the need to maintain the SPV, annual kind of fees and service charges, etc. More than that, there's no need for a trustee office anymore, because if I hold a token today and I'm transferring it to you, Mandy, then uh, because you're holding the token now, you're the true owner now. So there is no need for me to be present with you at the trustee office or the notary, let's say, office to exchange ownership for money, right? We can do that
Yeah.
on chain now, right? And we can do that today it's with fiat currencies where I still transfer the property value that you're looking for via bank account in exchange for ownership. However, in the future, like we said about programmable money like stablecoins, we're going to be able to settle much more instantaneously and even more efficiently. So a lot of innovation coming into the picture. Now, you know, what are we fractionalizing in this case? Like we said, we're fractionalizing or tokenizing a title deed. So direct integration with the registry, Dubai Land Department, and under the supervision of the Virtual Asset Regulatory Authority, VARA, which is one of the pioneering regulators in the region, if not the world, that has been quite proactive in establishing regulation around tokenization of real-world assets, around cryptocurrencies, Web3 altogether. So under their supervision and with through direct integration with the land department, we were able to be the first, fortunately, to tokenize title deeds. So at the registry level, you are now able to maintain a record of not just a title deed that is owned by one person, but a title deed that is owned by 500 people, 1,000 people,
Yeah.
etc., which is truly remarkable, right? When you look at it, and to this date, when we show like the title deed that has the tokenized title deed that has 1,000 investors on it, it's like a 16-page kind of document that has
Yeah.
all names of all investors. It's still quite shocking to see because usually we're used to one owner, maybe four owners of at most. Having 1,000 owners of one property is quite pleasantly surprising. So yeah, that's really the storyline here is that we were able to tokenize title deed directly without the need for an SPV, without the need for all these costs, extra costs, which actually brings your returns on your investment as an investor much higher, right? Because you're
Yeah.
avoiding these costs. So that's kind of
Yeah.
what we're doing. Yeah.
Talk more about that. Why so if I'm an owner of real estate in the US, why would I like even want there to be 59 other owners of my property? Like what are the reasons why this is really exciting?
Yeah. So I think looking at it personally, right? If I'm an investor and I want to enter the real estate market, right? If I'm not able, as an average Joe, not able to, let's say, buy a property in full, right? And incur, let's say, save up for a down payment so I can buy my first property and then, maybe get a mortgage, then so on. Then if I'm not able to do that, then I'm left out of the real estate market, and that market could be evolving quite quickly. We hear a lot about Miami, Florida. We hear a lot about LA. New York has always been like kind of reference for real estate globally.
Yeah.
These are quite mature markets that still evolve, still kind of attract investors to invest in those in the real estate market there, and who wouldn't want to be participating in one of the biggest markets in the world, if not the
Right.
biggest itself. So we're talking about what north of $600 trillion in real estate globally. 1 trillion in the UAE, for example, definitely much more in the US. So you want to be participating in that market. And
That's
if you're not
right.
able to do that by owning a property in full, right, in the beginning, then you're kind of left out. So with tokenization and with fractionalization more generally, you're able to lower the barrier to entry to that market. So you're able to invest in a fraction of a property, right, enter the market with as little as $150 in the UAE, $100 in the US, right? In different markets, different kind of economics, but with as little as that kind of amount, you're able to enter that market and you're able to benefit from the growth of that market. And if
Yeah.
you enter the right market, such as the US, New York, UAE, Singapore, London, etc., you might be capitalizing on property appreciation that is quite beneficial, right? UAE has big growth in its real estate market with rising demand, with mega development kind of projects in real estate, whether it's residential or commercial or you name it. There's a lot of demand in that space, and that's kind of driving the price of properties up, which is kind of something you don't want to miss out on as an investor.
That's
So
right.
so that's really the benefit that you get out of tokenization, fractionalization. More importantly, as well, if that property that you're betting on does not get, for example, the returns that you were looking for. Let's say there was some sort of macro level factor that impacted the neighborhood that you've invested in, or let's say you weren't able to tenant the property that you've invested in on time. It's not generated the right returns that you're looking for. If you're owning it fully, then you're bearing all of that risk, right? And
Yeah.
you have to still incur costs on service charges, on maintenance, on unforeseen expenses, you name it. With tokenization, with fractionalization, what you're getting out of it is I can put maybe 5% of my investment amount in one property in this neighborhood. I can do another maybe 2% in, this other building or other neighborhood or other developer, for example, or other community. And I can spread my risk much more broadly because of that lower barrier to entry. I can put in, a lot less and a lot more kind of building that portfolio or basket of real estate investments that I'm building, and kind of decentralize the risk in a sense, so that if one is not doing well, then maybe the other would be outperforming its forecast, and so on and so forth. So it really gives you the power to invest more confidently, benefit much more, right, and de-risk, like we said. And we haven't even scratched the surface in terms of what other aspects you can do with tokenization.
Oh
I'll
my
happily
gosh, right?
cover that in a bit. There's so much more we can do, knowing the true power of decentralization and everything we're seeing with what's happened in DeFi markets and crypto, what's happening with stablecoins right now and still going, and
Yes.
much more. There's so much more we can utilize by the programmable nature of tokenization, which we haven't even witnessed yet.
Yeah, it's so fun to talk to other people who have been, working in this space for so long. I often say I feel like I've gone to church because, like because they're, I'm just so excited about the future when I think about this, and for our kids and for their kids, that they're going to have these opportunities that are just so entirely different than what we had. But let's go back to, so let's say you have this property, it's owned by 60 people, and you're one of those people and you have just a very small fraction of the real estate. So what if everyone kind of votes to sell but you didn't want to, or vice versa, you wanted to sell, so what if you kind of like lose your vote? What are your options if, at that point for someone who, feels like their vote didn't matter?
Yeah. I mean, look, the use case itself, or the kind of the product, and what Prypco is offering today is not just tokenizing for the sake of owning a piece of the property. You're also, it's more of an investment, right? So when you're thinking about it as an investment, you're thinking about it about, very simply put, I put in X amount of dollars and I'm expecting X plus 10% every year,
Yeah.
or 30% 3 years or 4 years. So it's really about capitalizing on my investment and generating the maximum return possible from my investment, right? From my upfront kind of capital. So with that mindset in mind, right, Prypco's role is to make sure that we are sourcing the best properties out there that are not just tokenizable for the sake of tokenization, that are also good investment opportunities. And by that, we mean that we source high quality properties in areas that are quite attractive, that we know are going to continue to appreciate given the scientific kind of study and economic study of
Yeah.
historical transactions, and so on. And we also, something else that you might wonder is who's actually managing the property, who's tenanting the property, who's kind of administrating the property and generating income. So investors typically look for that, and with a 2 or 3 clicks of a button, you're investing in a fraction of a property. Prypco takes on the role of administering the property on the ground and sourcing tenants, vetting tenants, bringing in furniture, setting up utilities and Wi-Fi and internet connectivity, and doing all of that work on behalf of you as an investor, right? We're also managing tenants, bringing in the most kind of maximizing the returns from tenancy, right? Bringing in kind of the best deal possible, and
Yeah.
then generating income on a regular basis. We pay out dividends to our investors every month, right? And that dividend is basically
Amazing.
revenue from the tenant as well as minus expenses that we incur throughout the month, and that goes out net to investors' wallet on our platform, right? Why I'm saying all of that is, and yeah, like just to build more on top of that, is that every 3 months we conduct an appraisal or refresh the valuation of the property through
Wow, three
independent
months.
valuators every 3 months.
Yeah.
And, you know, you would think that, 3 months could be a lot, but in a growing real estate market that's kind of booming, with the UAE, for example, we're seeing a big demand, a big fluctuation of population into the country. There's a big demand for Dubai real estate, UAE overall, even other kind of Emirates as well. And I'm sure in other parts of the world as well, where there's good economic outlook, where there is safety for people to live in, to grow, to build their families, etc. They're looking for real estate. It's quite in demand. So in these kind of markets, you also see the property value appreciating over time. So every 3 months, most of the properties that we source actually appreciate value. So what that
Okay.
means
Amazing.
for investors is basically that every month you're collecting revenue without having to move from your couch, right? Every
Right.
3 months, you can get a revaluation of your property. And if your property or your investment appreciates in value, or your property appreciates in value, you can now exit your investment. Actually, you can exit your investment 24/7 because of blockchain and because of
Right.
tokenization,
Right.
and just simply put your token up for sale, and then a buyer would buy it from you, and you automatically transfer ownership, and you cash out that delta appreciation from the time you bought it. So you're not only making profit on a month-to-month basis from the dividends paid out, but you're also making profit from the net sale value that you're selling your token at, especially if the property appreciates. So why am I saying all of that? But going back to your question, if I'm an investor and I am being, so maybe just to highlight one more thing about voting as well, because you mentioned voting. What we do in terms of voting today, which is one step forward into democratizing, let's say, investment in real estate, what we're doing today is that if the property appreciates in value to a point that is quite significant, let's say 15%, 20%, maybe more, right? And we get offers from the outside world to purchase this property, then what we do is we send out voting invitations to vote for those 500, 1,000 investors to say, hey, look, we've got an offer for this much. Your property could have appreciated by this much if we go forward with this sale. We've generated this much dividend for you over the course of the years, and we have now the opportunity to sell it. And by selling it, you can exit your investment. We will, get rid of your tokens. You will no longer own the property, but you will cash out on your investment, and you will be making X amount of, dollars. And we ask these investors to vote. And if we achieve a majority, so basically 50% plus one person, right,
Yeah.
that say yes,
Yeah.
we go ahead with the sale of the property. Now, back to your question, if one investor that said no, and it's not really convenient for me, then this is where democracy comes into
Yeah.
play.
Yeah.
And to be completely honest, I would not say no to a 20% appreciation on my property, especially if you're betting on exit, because you want to exit your investment. An
Yeah.
investment is not a good
Sure.
one unless you're able to exit it. So if you
That's
have an
right.
opportunity to do so, I would jump on it and be very happy with my returns. And hey, guess what? I can cash out and then reinvest in many more properties. So it's really kind of that kind of cycle that we're kind of enabling through the technology, through the ecosystem, through maximizing the opportunity for investors, through making sure that kind of the life cycle is executed at par, and in such an efficient way that investors don't really have to deal with anything. They can just sit on the couch, press a few buttons, invest, and then fast forward, see their money grow.
Yeah. It's amazing. And I'm so excited that it's actually happening somewhere. So we have kind of something to base all of this on and see the efficiencies. I'm just such an efficiency nerd. Like I'm like, let's make this better. And I feel really blessed to be like alive right now to watch all of this happen. So everything
Tell me
here leans on Dubai.
Yeah, I'm quite the same. I come from a consulting background, so I used to
Okay.
do process automation work for big large companies. So
Okay.
literally like mapping out every single process of core business or enabling business operations and trying to identify room for improvement and automation and digitization, and then
Yeah.
mapping out what the financial returns would be by doing so, and then executing on that. So I
Okay.
totally get you. Very much kind of OCD process,
Yes.
and structure and so on. And it actually works in these markets, right? Because really, if there's going to be a lot of players that are going to be doing the same thing we're doing, and the kind of your USP, or your kind of your selling proposition, or your like distinguishment in the market is going to be not your ability to tokenize. It's going to be your ability to execute efficiently on the ground, maximizing return for investment, managing the property in a way that continues to make it investable and attractive for buyers to buy it out eventually too, right? It's not just
Yep.
about current investors, but also for the outside market to be also interested in this property. So yeah, structure and process and kind of meticulous design is the way to go.
And it really is a huge undertaking. I mean, what you guys have done, and I think about just the property management piece alone. And, it'll be interesting to see whether or not some of these big players, the CBREs, the Jones Lang LaSalle's of the world, if they if they're able to kind of swiftly move into a property management style that would fit into this new framework, I maybe, I don't know. I kind of could see, some startups actually doing this more efficiently than maybe some of the big players. So, but that alone, I mean, is just huge, especially in the US. You think about the New York market alone, right? Like all of the different property managers that exist there, and them being associated with the owners in which ways, and there's just a lot of things that are going to have to kind of
Yeah, like
get
align,
smoothed
right?
out to make this.
Start need to align on all fronts. Yeah, I couldn't agree more. And I lead operations for our business unit on the ground as well. And you know, tokenization is definitely a big kind of value add to the space, right? But like we said earlier, it is a physical asset on the ground. Human beings are living and occupying these assets, and you still have to kind of inherit all the traditional scenarios that could come out of dealing with people on the ground, especially in their homes, right? When we talk
Yeah,
about
that's right.
residential. And with tokenization or without, you still have to deal with that on the ground, generate the income, maximize that generation. And like you said, there's so many stakeholders involved in a property, depending on the country you're in. Like in Dubai, for example, you have 13 different stakeholders that
Okay.
our property managers and portfolio managers have to deal with as soon as the property gets fully funded on our platform and gets transferred to us for management. Um, 13 different stakeholders we have to deal with. And, if we go back early days when tokenization first started, when you're telling these stakeholders, like a utility company, for example, you're approaching them, you're like, hey, I want to register this property under this tokenized platform called Prypco, which is administering the property, and you're showing them this title deed that has 1,000 investors' names on it, and
Yeah.
Prypco's not there, right? They're like, "Who are you? What are you? Why? What are you doing here? This is not your property." So, and that's just one of many, many examples, right? So, for this use case to be successful, there had been so much work back and forth with so many different people involved to pitch in the idea, to convince them about it, to make legislative changes as well on the ground, either through the registry, the government, either through authorization letters that needed to be generated so that these stakeholders know who you represent and what this use case is all about. Not everyone was familiar with tokenization, what it means back then, a year ago. A lot of things that happened on the ground that needed to happen in order for this whole ecosystem to shift
Yeah.
towards enabling such a use case. And there's so much more to solve for. And like you said, each jurisdiction, each country, each state has its own rules and has its own stakeholders. So navigating all of that is no easy task at all.
Yeah.
It's super exciting to see it happen, and see it unfold. And we're just scratching the surface.
It's so true. Yeah. Okay. So last question. You're very passionate about this. I wonder, just tell me for you personally, what makes it worth navigating all of this to watch it come to fruition?
Yeah, such a good question. I mean, and this is quite relevant to your audience, like you mentioned earlier, right? So what I've mentioned so far has been focused on ready residential units, right? And tenanted units. I'm super excited to see this use case expand towards commercial properties and office spaces and retail
Yeah.
shops and so on. I want to be living in a community where I own, let's say, a fraction of this great supermarket that's a great supermarket in the neighborhood. I'd love to own a piece of that, not
Yeah.
just because it's generating income for me, because I can be associated with it as well. Has this kind of sentimental value as well associated with it.
Absolutely.
Office spaces and commercial properties are known to be much more stable in terms of tenancies, right? Like the tenancies are more like a 5-year or 10-year contract, for example. So investing in those could generate but much more a bigger yield, right? I'd like to
If
own a
it's a
piece
good
of
one.
art. Yeah, exactly.
Gotta
Like,
be Class A these days, but yeah.
yeah, I'd love to own a piece of a mall nearby or a Costco, for example, right? Or something like that, and it's generating good money for me, right? Especially if it's a booming area that's attracting a lot of kind of visitors and customers and so on. I want to invest in a whole building one day, right? If a whole building is being built and if it's an off-plan project, for example, that requires capital upfront, I want to be able to see tokenization bring value to that space as well.
Yeah.
And the sky's the limit, to be honest, especially if it's a good investable asset, right? Like you said, it has to be a good investment. It has to generate the right income and it has to appreciate properly. Tokenization on
That's
its
right.
own is not enough to make it a good investment, right? And you need to
That's
have a
right.
good exit strategy as well to make it a worthwhile investment. So super excited about that part of the kind of evolution of this use case. And I would love to see the US post post Clarity Act moving towards such a world, knowing how the US operates from a real estate perspective at the county level or at the state level. I would love to live in a world where I see the county level, the county tokenizing its title deeds, and then another state tokenizing its title deed through on a blockchain, and then these blockchains talking to each other. For example, through interoperability, through kind of cross-chain communication technologies that we're seeing being implemented in the crypto world and the stablecoin world. We want to see those happening in the real estate world as well. Yeah, it's super exciting, honestly. We're seeing it also, and we see that happening on the ground too. Prypco started in the UAE, and now we're seeing a lot of countries as well, very much inspired by the success story in the UAE, that they want to replicate the exact model in their jurisdiction. So we were recently engaged with the Ministry of Justice in Georgia, the country, not
Okay.
Atlanta, Georgia, in Europe. Hopefully in Atlanta, who knows? But they were very kind of inspired by the journey, by our journey in Dubai, and they decided to partner with us to implement the UAE model in Georgia with the right legislative changes in the parliament, with the right technology integration with their land registry, and be able to attract foreign investors into the country, which is a big deal for a lot of countries these days. So
Yeah.
tokenization of real estate is actually a very big lever in that regard.
That's right.
Just like Dubai has done, just like Dubai has its targets in 2033 to attract to tokenize 7 to 10% of its real estate market. So
Okay.
there's so many kind of innovations and there's so many kind of pathways to explore in this space. We're just getting started, like I said. We're just scratching the surface, and that's what keeps me, going. I want to be able to see what sort of usage or utility I can have with the token I hold. If I'm not able to trade it to you, Mandy, what can I do with this token, right? I'm not able to exit it. Can I maybe give it to a bank in exchange for a loan? Can I maybe lock it in and generate yield or stake it, for example, like we do in,
Right.
in, in crypto? What
Yeah.
else can I do? Can I exchange it
Oh
for
my
gold?
gosh.
Maybe, who knows, right? Like tokenized gold. That would be super
Right.
interesting. And yeah, there's so many more use cases we haven't even kind of identified yet. So to your point, it's such an exciting space. Being with the right people as well, and that wake up every single morning with their coffee, with their hair straight, try to, get things, get going and get discovering. Yeah, super excited to be in this space and can't wait to see how it's going to unfold.
Yeah, absolutely. The very first podcast that we produced is with Dan Silverman from Balcony. Do you know him?
Yeah, of
Yeah.
course. I've heard of Balcony. Yeah.
Yeah, okay, excellent. So, there is a start to this in the US. And if, audience, if you didn't listen to that one, definitely want to go back and hear that one too. But Jad, thank you so much for joining and giving us a peek into the future, genuinely showing us exactly what can happen. And thank you so much for your passion for this space. I'm really happy to have connected with you. And audience, if you liked this and you feel like it could be beneficial for someone to hear, then definitely share it with a friend and a colleague. And Jad, thank you again for being here. Take care.
Thanks for having me. Take care. Cheers.